During the Q1 earnings call, Tesla gave a first look at its robotaxi-powered ride-hailing service by way of a potential smartphone app that would be used to summon a vehicle for a driverless ride. This is far from the first time we have heard about Tesla's robotaxi fleet and what it might be capable of. The company plans to compete with the largest ride-hailing services in the world and claims that owners will even be able to rest while their car makes money for them. However, they are in need of completing the full self-driving suite, which evidently seems to be moving forward based on releases of the beta program, and statements from the company. Tesla has even scheduled a specific date for the robotaxi unveiling. August 8th, the effort took another step forward with the release of a new graphic that Tesla showed in its Q1 2024 shareholder deck, revealing what the ride-hailing app for robotaxi might look like. It shows how incredibly refined the app could end up being, with details like interior climate, real-time vehicle tracking, and other features shown. Tesla detailed some of the developments it made in the robotaxi and autonomous ride-hailing program over the past quarter. "We have been investing in the hardware and software ecosystems necessary to achieve vehicle autonomy and a ride-hailing service. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural networks trained on billions of miles of real-world data." Of course, we have reasons to be skeptical. Although Tesla did not outline an exact timeline of when the robotaxi or FSD will be complete so the ride-hailing service can be activated, the renders of the app seem to show the company believes it could be coming soon. However, Tesla has said for years the FSD suite would be done and autonomy would be solved next year. Still, Tesla's development of the robotaxi could be a major moneymaker moving forward, and it seems the company is putting its eggs in this basket for the future. That's why it's a priority. V12.3 is looking good, and it's only going to get better, exponentially better, with 5 million cars worth of data every day. Once people get comfortable with it, they'll never go back, similar to how millennials use food delivery services instead of making their own food. Musk also reiterated a comment from ARK Invest, which argued that Tesla must be valued as an AI company. Cathie Wood said it best: "Tesla is an AI company." Musk also noted that those who value Tesla only as an automaker will not understand the company well. "We're putting the auto in automobile," Musk said.
I have to tell you, watching the breakthroughs in AI that we are seeing, they are astounding, the speed at which this is moving.
Right.
So it is interesting. I think it's a data issue. Autonomous taxi platforms are the biggest AI project in the world, and therefore we think Tesla is the biggest AI.
Cathie Wood, the CEO and Chief Investment Officer of ARK Invest, has been known for her bullish stance on Tesla and has often referred to it as more than just an automotive company. Cathie Wood of ARK Invest appeared on Squawk Box Day and discussed mainly about autonomous taxi platforms are the biggest AI project in the world, and also added that Tesla is the biggest AI player. Cathie sees Tesla as a significant player in the artificial intelligence space, particularly due to its advancements in autonomous driving technology. Wood has emphasized Tesla's potential to dominate the autonomous vehicle market, which she believes is a crucial aspect of the broader AI landscape. Tesla's vehicles are equipped with advanced driver assistance systems, and the company's been working on developing fully autonomous driving capabilities. It's worth noting that opinions on the role of Tesla in the AI space can vary among experts and analysts. While some share Wood's optimism about Tesla's AI prospects, others may have different perspectives. The section of AI in the automotive industry is indeed a topic of interest, especially as companies work on integrating AI into various aspects of vehicle functionality and decision-making. Investors should consider various factors and conduct their own research before making any investment decisions based on specific viewpoints or statements from industry figures like Cathie Wood. Market conditions, technological developments, and regulatory changes can all impact the performance of companies in the AI and automotive sectors. Cathie Wood and ARK Invest have become something of the poster child for Tesla Uber bulls. ARK has been a prominent investor in the company for years. This year, the firm raised its price target to $2,000 per share by 2027, an increase of roughly 10 times the stock's current value. The basis of this outlook, according to ARK, has to do with autonomous taxis and artificial intelligence. ARK has said that the currently flailing robotaxi industry will be bringing in around $10 trillion in revenue by 2030, and the firm thinks Tesla's in the pole position to dominate that market. Still, ARK's holdings are telling a different story than that which Wood keeps selling. ARK's flagship innovation ETF has sold roughly 1 million shares of Tesla, bringing what was once the firm's top holding to its second largest holding. Despite this, Wood's bullishness outwardly remains unchanged. Speaking to CNBC today, she said that the autonomous taxi industry's biggest hurdle is the quantity and quality of usable training data. Cruise's recent issues are not a concern to Wood, as Tesla's data-gathering fleet is far larger than Cruise's, despite the fact that Tesla's self-driving remains stuck at a Level 2 designation. Wood said that ARK has not sold much Tesla since that point. She added, however, that the trimming, at least in part, accounted for the macroeconomic concerns that CEO Elon Musk highlighted on Tesla's most recent earnings call. She added that so long as ARK is right on this autonomous taxi opportunity, the firm's Tesla holding will remain in the top 5 in the fund. While ARK's main thesis for Tesla involves dominance in the currently non-existent robo-taxi market, Wood thinks that Tesla will also continue to dominate in the electric vehicle sector. Part of this dominance has to do with a pullback in EVs across the rest of the industry. Both General Motors and Ford have recently announced significant pullbacks in EV investments and delays in the production of upcoming EV lineups, all to protect profitability. Wood said that these automakers struggling to find a way to profitably produce EVs are facing a catch-22. They can't be profitable in this space unless they scale. It's a catch-22, and their shareholder base is very ICE-oriented, and they want their profits now, and they want their dividends now. This move to Wood represents nothing but an opportunity for Tesla to continue to gain market share in the sector, an opinion that's shared by Deepwater's Gene Munster. Munster said last week that if the mass transition to EVs doesn't take place for another 30 years, the pullback will have been the right approach. But if that transition happens within the next 5 to 10 years, these legacy automakers will have given Tesla a greater lead, making it more difficult for traditional car makers to build a profitable EV business. Cathie Wood of ARK Investment Management is known for her advanced technology investing. Recently, both Wood and Musk have publicly shared their strong margin sentiments that could produce massive upside for Tesla. I have a strong belief in the vision, strategy, and leadership of the company. While I'm not as focused as Wood on future-oriented technology, I predict a strong position for Tesla in decades to come, primarily based on their software as a service, SaaS, AI-integrated margin expansion. That should put them in a league of their own against other traditional car manufacturers. The ARK Innovation ETF ARK is Cathie Wood's most popular and largest investment fund. According to a report on ARK Invest website, ARK's expected value for Tesla in 2027 is $2,000 per share, with the current share price of around $162 as of the making of this video. Her expected upside seems overly optimistic to many, including myself at first glance. It's also worth noting that in a similar April 2022 report, ARK predicted a value of $4,600 per share in 2026. Both reports stress the major upside warranted by AI as a service, most notably in the form of robotaxi revenue. In a recent interview by David Faber for CNBC, Elon Musk mentioned that an automated taxi service run on a revenue share basis of 50-50 or 70-30 in favor of the vehicle owner could create a long-term high-margin revenue stream on top of any car sale profit. This is one example where I see evidence that Tesla can particularly shine in the AI age. Tesla's net margins are currently 11.24%. SaaS integration could feasibly affect net margins so much that I analyzed it could position Tesla as the highest margin automotive company on the planet. The only competition in the industry would be other mimicking AI car companies. I agree with Wood that Tesla can hold a large market share in robotaxis, securing a long-term moated revenue stream from highly advanced and difficult-to-copy products. If we look at Tesla's income statement, we can see just how heavy the cost of goods sold element weighs on the company's overall profit potential. However, when compared to industry competitors in the ordinary automotive industry like Toyota, which currently has net margins of 9.34%, or Ford, which have net margins of 3.54%, Tesla does exceptionally well. Even when I compare Tesla to BYD, a leading Chinese competitor, Tesla wins by miles. BYD's net margins are currently 4.96%. I find it prudent to also compare Tesla to Ferrari, which is by miles better than all automotive companies on margins, including Tesla. Ferrari's net margins are a massive 20.27% from a gross margin of 49.39%. What this margin peer analysis reveals to me is that Tesla is currently placed somewhere between top-class luxury and ordinary automotive. Except that isn't quite right. Due to Tesla's forward focus on AI and its advanced robotaxi initiative, the company's positioned to create an automotive segment unlike any other. Margins could perhaps defy even Ferraris once the AI initiatives are fully operational. While carefully incorporating Tesla's forward-looking software play into valuation, I think the company's grossly mispriced at current. The GF value chart also shows this to be the case. In my opinion, the chart is a largely accurate depiction of a current opportunity, especially when considering Tesla's long-term strategy related to AI. I see evidence that Tesla will continue to be a leader in automotive design. Where it once had the EV initiative, it'll soon have the AI initiative. This will place the company in a stronger and more innovative position than its rivals, including most other EV companies who will be playing catch-up in a similar way to how they have with Tesla's EV dominance in the past. Thanks for watching. Until next time.